One of the most anticipated direct listings of the year, perhaps the most anticipated direct listing, that would be Slack, making its debut on the New York Stock Exchange this afternoon. Shares open for trading $38.50. The reference price last night was $26 a share. To talk a little bit more about what's going on with Slack, let's bring in Dan Morgan, Senior Portfolio Manager at Synovus Trust. Dan, thanks for stopping by. What's your take on what we're seeing in Slack today? What's your view on the company?
Well, it's interesting because there was a lot of people that were somewhat, cautious in terms of this direct marketing, not going through a standard IPO procedure. We know that Spotify did it April of 2018 and had good success. I don't know, this could be a situation where we go down the road where you may see more tech companies opting to go this route in terms of just, here are shares, and go ahead and put them out there and let investors buy the shares and not get caught up in trying to place the shares with clients of these investment banking firms. So it's interesting to see such tremendous success. As you mentioned, I think preliminary were like $24, $25, and at one point we're trading at $40 a share. So you'd have to view this this offering as definitely a success for Slack initially.
Dan, you had Slack CFO tell our Melody Hom, basically, don't expect us to make money anytime soon. Are you out there buying that stock? Are you interested in buying the stock knowing that they're not going to have profits at any point, probably over the next 2 to 3 years?
Exactly, and that seems to be what's going on with all these unicorns other than Zoom. We look at Lyft, we look at Uber. I believe in fiscal year 19, they lost $140 million. There's some estimates out there looking for maybe $590 million in revenue for fiscal year 2020. That would give you a 34 times price to sales multiple, which is still very, very high. In terms of what we're doing, we're kind of taking a step back, kind of let the dust settle. We tend to be a little bit late to the market when it comes to technology stocks. We do eventually end up buying them. We bought Facebook after the IPO, but we'll kind of wait for the dust to settle, let the valuations maybe make a little bit more sense. And you brought out a good point. Does the business model work? We don't know if Lyft and Uber's business models work, and we don't really know whether Slack's business model is going to work.
So Uber certainly had a different debut to the public, and the CEO actually kind of complained about the market that they went into, the environment, Dara Khosrowshahi. Do you think that Slack could have picked a better day than today? Is this the best day to go public?
It's huge, Jen, because if you think about what you were talking about before I came on, you have the Federal Reserve now coming out and saying they're going to lower rates maybe in July. You had all that trade talk that was out a couple weeks ago. We had the market sell off on that. You got all these positives hitting the market, and then all of a sudden they decide to go public on this day. It's a perfect day to take the company public, unlike, like you mentioned, we had some negative headwinds when Uber went to, actually did their IPO.
All right, Dan Morgan, Synovus Trust, thanks so much for joining us.
Thank you.
Let's talk a little bit about the price of Slack here. So the graphic we have, up 5% from the $38.50. The reference price was $26 a share. So from that price, it's up 60%. I know there's a little bit of a debate about exactly how much it's up. I'm kind of partial to the $38.50 is where it started trading, but I think a lot of people are latching onto the 26 as if it were a traditional IPO.
Yeah, this is going to be a little bit of a debate, and we're kind of on an island here at Yahoo Finance, quite frankly, using that 38, which is the first trade, whereas the 26, as you say, is the reference point. And the conversation here at Yahoo Finance is that no one actually got the stock at 26 as opposed to a traditional IPO. Now, of course, the NYSE, my understanding is using the 26. Everyone likes to use the 26 because it makes the IPO look so hot, right? But I think where there's going to be some discussion going forward about what point to use.
Well, and I think the whole point of a direct listing was that you didn't have to worry about that pop, right? The stock just starts trading. So if it was at 75 right now, then it would be a pop from the 38.50. But it's at $40 or $2 above where it started trading. So I kind of feel like the 26 is Well, that was the reference, but that no one owns it at 26.
Yeah, and also that's like talking about, oh, this is what the range was before on the road show or stuff. The whole point of a direct listing is that it's different. And so I think we should get away from that. And this is where it started trading. And here we are.
And either way, it's now a $20 billion company. And yesterday it was about a $12 billion company.
And in August, it was a $7 billion company.
That's right.
But you know what?
You do the math.
I mean, I don't know if you want to talk about this right now, but it is a good business. It
Well,
really
let's talk
is.
about that, yeah.
I mean, I use it, we use it here at Yahoo Finance, and I have to say, it's really interesting because it is an enterprise software company, but it is extremely consumer facing.
Yeah.
So when you use it, the interface, the UX is fantastic. I'm a big fan, and I'm a convert. I mean, we just all started using it recently, and you take for granted how great this software works. It really works extremely well, and it's sort of the best of both worlds of consumer software and enterprise software, and I think it has a lot of upside.
And so do a lot of people today.